Imagine waking up one day, and before you've even had your morning coffee, you owe someone $100,000! Now, amplify that feeling by millions of people! That's America today, with a staggering debt that's growing daily. The nation's fiscal pulse is racing, and the global implications are immense. How did the world's powerhouse even get here? And is there a way to get out of the colossal $33 trillion in US debt that's making global headlines? Like many of us, the US government sometimes spends more than it generates. To cover this gap, it borrows money year after year. Each year's deficit adds to the growing national debt. Years ago, the US government piled up debts due to national emergencies, like wars and the 2007 Great Recession.
But that all changed in the wake of the 2008 financial crisis, when two things happened. The US economy shrank.
But fast forward to today, deficits have taken another turn. The pandemic, rising healthcare costs, an aging population, and the proxy wars are pushing the US into a deeper financial hole. You see, the present tax system simply just does not generate enough money to fund the promises the government has made to its citizens. Did you know the US shells out over $1.8 billion with a B, every single day on interest payments? Rising debt threatens America's future in many ways. The most obvious one is the reduced public investment. As the government piles up debt, it becomes more focused on repaying these loans than anything else. With more resources diverted to these payments, very little is available to invest in critical sectors. But it's even worse. Interest rates are simply climbing, not going down. And borrowing costs are hitting the roofs too. Ask any American, and they'll tell you it's not the best of times to be Uncle Sam. If bad gets to worse, the country could end up being indebted to creditors around the globe and have fewer resources to invest in internal security. What would then become of America, the world's greatest country? Buckle up, because the numbers, the reasons, and the potential fallout might just blow your mind. In today's video, we'll take a deep dive into the world of US debt. We'll explore the dangers, causes, and possible solutions. Can America get out of this financial maze? Welcome to Wyzeconomist. Keep watching, and remember to hit that subscribe and like button if you haven't already. After Treasury Secretary Janet Yellen suddenly announced that the government may run short of money to pay its bills, Americans panicked. These bills are not your everyday kind of bills. These are payments to investors in treasuries, federal employees, contractors, and Social Security pensioners. Total government spending is about $525 billion monthly. But here's the thing, of this figure, $227 billion is deficit spending. Even so, the government still spends more, so it needs to borrow more to keep running. Hitting the debt ceiling means that the government can no longer borrow to make up for the deficit. And guess what? Millions of Americans who rely on government money directly or indirectly would be affected should the government halt borrowing. This is not good news. Economists expect a recession by next year. The sky-high interest rates aimed at tackling inflation and raising borrowing costs are starting to pay off. But then, it is giving the economy a heavy punch. The economy is weak, and unemployment rates are going up. Already, the government is competing with businesses in the capital market for loans. This means that entrepreneurs would suffer high capital costs. Of course, this shrinks innovation and slows down the advancements that could improve the lives of Americans. As if that's not enough, investors start to doubt the government's ability to repay this debt. They could demand higher interest rates, further raising the cost of borrowing for households and businesses. With reduced investment and lower confidence comes reduced productivity and wages for American workers. The IMF says that countries should maintain significant investments in health, education, and infrastructure. But the US may not have enough for these necessities, economic emergencies, and proxy wars. In other words, federal resources are swallowed by interest payments, and less attention is paid to economic growth. Recall that during the 2008 financial crises, the US government responded with a stimulus package to save the day. What if another crisis happens in the coming years? How will it cope, given the national debt is at an all-time high? The United States boasts the world's highest national debt. To put this into perspective, the country owes as much money as the next 4 countries with the highest debt: China, Japan, France, and Italy. Everyone is watching the US to see how it would juggle all of this debt. And trust me, stakeholders are a bit nervous. A higher debt means that the US may have trouble meeting its financial obligations in the future. And here's what a debt default means. Orders for Chinese factories selling electronics to the US could dry up. Swiss investors who own US treasuries would suffer loss, and Sri Lankan companies may no longer use the US dollar as an alternative to their currency. No part of the global economy would be spared should the US default. It's safe to say that the US would lose its status as a reliable economic partner. The US has battled with debt since its inception. The debts incurred during the American Revolutionary War was a whopping $75 million. The debt is a combination of a deal with the French government and domestic investors. Debts are constant because the federal government needs to pay for vital services. But why is the US debt train beyond control? Weeks ago, Congress was under pressure to raise the debt ceiling, but it did not succumb until President Biden promised to cut down federal spending. There's so much the government can do to reduce overspending. The truth is, waste, fraud, and abuse are the unholy trinity of the US government. According to consulting firm McKinsey, the US government throws over $140 billion annually on improper payments. And the kicker? The US government detects less than half of the amount. Some experts suggest that the federal government has too many employees and should consider slashing this figure by 25%. The government's payroll is around $752 billion, which is 12% of the government's total spending in 2023. Should the government slash this figure, who will keep the Social Security and Medicare programs running? And that's not even all. The government needs people to manage immigration and customs, the Federal Aviation Administration's air traffic control system, the Department of Defense, and other parastatals. Therefore, the government cannot help but overspend. Another reason for the sky-high debt in the US is the massive tax cuts. Advocates for this policy argue that cutting taxes improves the economy because people have more after-tax income to buy more goodies. It also turbocharges saving and investment, leading to more production and reduced unemployment. While this sounds like an economic superhero plan, there are several downsides to it. Critics say that it not only benefits the wealthy and reduces government spending on services that lower-income families rely on. Tax cuts reduce government revenue and translate to more debt. Ideally, governments finance tax cuts with immediate spending cuts. But this is not the case here. Already, the government struggles with overspending, so there's no way out of this. Beyond the issues of overspending and tax cuts, the US government often runs to trustworthy leaders during an economic downturn. Historically, government debt piles up after a global recession. It rises between 4 to 15% points of GDP. In 2020 alone, US national debt grew by more than $4 trillion. The reason for this is not far-fetched. Following the outbreak of coronavirus and its effect on the economy, the US Treasury borrowed trillions of dollars. These monies were used to amp testing and hospital capacity. It also used some of it to keep some businesses afloat and avoid bankruptcy. Overall, the money helped the economy bounce back, after a long pandemic-induced slumber. The big takeaway in all of these is that the government cannot exactly avoid debts. However, it can manage it to a great deal. Reducing debt and stimulating the economy is achievable, but the tactics are contradictory, as you're about to see. Between 1921 and 1974, U.S. presidents led the government budgeting process and made major financial decisions. But in 1974, President Nixon signed the Budget and Impoundment Control Act, which passed the budgeting baton to Congress. Every year, citizens debate about the need to balance the budget or slash government spending. These cuts mean a reduction in benefits for low-income families, environmental protection programs, veteran programs, and a host of social goodies. The idea is that the government would save from this and divert it to other areas. Alternatively, the government can raise taxes to make up for its expenditures and pay up its debts. These taxes include federal, state, and local income tax. It can spice things up with an alternative minimum taxes on tobacco products, property, estate, and corporate taxes. The profit from these hikes can now be channeled into federal programs. It becomes a win-win for the government and low-income earners. Better still, the government can put on its magical hat and simply grow the economy. A thriving economy means that businesses are making more profit and people are earning more. This naturally increases tax revenues. Plus, the more people are employed and earn a decent living, the less they rely on social safety net programs. Higher tax revenue and reduced government spending automatically lead to budget surpluses. These surpluses can be used gradually to clear off national debt and stop it from growing bigger. While this idea sounds great on paper, achieving a steady economic growth is complex. It depends on a bunch of factors like fiscal policies, political decisions, and other external economic conditions. The U.S. still has a lot of work to do when it comes to debt management. Can the U.S. get itself out of this crisis? Share your thoughts in the comments below. Don't forget to also like and subscribe to see more from our fantastic channel. And as always, thank you for watching.